Here with us on Market Guru. Today we're in conversation with Balasubramanian of Birla Asset Management. Bala, good morning.
Good morning.
But a lot has changed, in fact, Bala, since the last time we spoke. Global cues are a lot calmer. Our markets are simply on fire. Things couldn't be much better, could they, at this point?
Yeah, true. I think the way it's planning out for India perspective. Anything that's happening in the global market from a point of view of worry, which is largely on account of the US likely to hike the interest rates. Now I think taking a back seat. Right. The last, I think, a few months, clearly I think ECB looking at the whole QE process to revive the whole European economy is ensured that one, there is a fear of growth not coming back. So therefore there is a need actually for support the economy. At the same time there is a fear of deflation. Globally with the oil prices, the way I think it has been behaving, it's still now moving around $48 to $50. So there is a fear of deflation also is emerging in the global market, which essentially means that global liquidity continues to remain very, very strong. And whatever the concern which was there earlier that US interest rate hike would happen soon, now it's also getting now a bit postponed, maybe about 6 months or 1 year or so. So in that sense, I think it definitely is a positive. And second is from the India perspective, I think we are going the right direction. More with respect to the interest rates, falling inflation, and the focus on increasing the investments. I call it the 3 I's. So falling inflations and falling interest rates and increasing expectation on investment. So all those things I think would probably set the ball rolling as we move forward, and even the budget in terms of where do we go actually in terms of the growth rate. I think clearly the one other thing which has emerged definitely is in the last few months, and most of the economists has put out a report in expectation of GDP growth in excess of 5.7 to 5.8, which I think is a big positive for India.
You know, the market's also clearly reflecting that kind of optimism. I mean, we've been talking about a market which has been hovering around the record high level. Do you believe that somewhere it's getting a little too hot for the market, you know, that the investors won't be able to handle, or you believe there's still enough potential in this market? Just your reading of the recent momentum and the way the markets have shot up?
I think, see, anyway, whenever the market always goes up, the question mark always comes. Yeah. Is it overheated or is it overvalued? I think our belief is clearly in the last few months, the participation levels from domestic has been very good. So therefore, the likelihood impact of that in the market is going to be pretty large. And the other is anyway the earnings seasons, and then the right now the market has been also been looking at how the earnings season will pick up. And secondly, whatever the effort that has gone behind in terms of pushing up the economy to the next level, so what kind of impact would come on the Indian Indian corporates also need to be seen. Sure. I think we are seeing actually the good mix of results. From the overall market point of view, though it has touched 30,000 index, we are just interestingly we are doing some analysis about a few days back in our own estimates on the valuations. The price to book multiples for the Sensex companies we still take is now close to about 2.2 times. Okay. Whereas the same price to book multiples in 2007, if you see the earlier peak, was almost about 4.5 times.
That's still
so there is still some headroom which you can say. And second is the other interesting analysis what we did, the interest cost of the Indian companies as a percentage of the sales was very, very high. And this is equivalent to actually the level at which we were actually in the high interest rate scenario. Yeah. I think as we move forward, we expect the interest rates to come down. So there has to be some bit of a pickup that should come on the earnings of the companies also. So therefore the valuation need to be looked at in conjunction with what is the direction we are looking at it. And secondly, whatever the government effort that is being now pushed in terms of getting the economic kick-started also has to reflect somewhere in the down the line in terms of earnings. So therefore I am quite bullish on the inflows coming into the mutual fund industry.
I want to talk about liquidity a little more. We've suddenly seen a flurry of fundraising coming in. SBI announced 15,000 crores likely. Tata Motors coming out with a massive rights issue as well. There were some bond issuances that have got oversubscribed as well. Do you think the appetite for Indian paper has gone up? And one level, you're seeing the debt numbers at 15,000 crores, Bala, in the first 20 days of this month. Does it somehow start to raise vulnerability as well? Because as you go out and rush and raise money, especially in dollar offerings, you're going to see pressure on the currency on one side and repayment pressures as the dollar gets stronger and stronger globally.
I think interestingly, the appetite for Indian bonds is one of the highest as of now. I think the reasons are plenty. One, the stability of the currency that we have been seeing for the last many months is pretty good. Plus now there is an expectation that we may probably go into the balance of payment, surplus balance of payment situations. Even a current account deficit, which earlier was a concern, is no more a concern. In all probability, we may get into the surplus kind of scenario. So where do you go actually in this kind of scenario? If you take an open call and if you leave your currency without hedging, so there is a high probability that you will make some money on the currency acquisition as well. So that's one that is being taken. Then second is the appetite for corporate bonds, the limit that is still been available. So only about 64-68% of the limit that is available is still utilized. The unutilized amount, the equivalent with that in Indian currency is about almost 75,000 crores. So 75,000 crores, assuming scenario, it has to come to the market and people have to utilize this limit as long as the global interest rates remain very, very soft. And then the 70,000 crores, if you have to go and buy these assets in the market, either they have to buy the assets that are available in the secondary market, or they have to buy assets from the same corporates who have been raising money in the market, or it has to fund actually those companies who are fresh in the market for looking at raising money, who do not have any exposure, who do not have in anybody's portfolio in the global market. So therefore the fresh appetite also comes. So that's why I think they look at it in the current scenario, the demand for Indian papers is not just only high, only in equity, is equally high even in the fixed income space. And because of this, if you look at the whole corporate bond space, they're all trading at about one is all-time low, and second is they are trading at actually one of the finest spread vis-a-vis the government of India bonds.
What about fund flows, Bala? We've seen quite a gush already in the first month of the year. Do you see that continuing? Any risks you see to that going ahead?
Not really. I think the flows will continue. Okay. I think one, it is largely something to do with the kind of fund exposures which people have got in domestic equities and domestic mutual fund schemes. So we see actually clearly the trend is emerging for even 2015. We will see actually the inflows into the mutual fund schemes will remain very good. But I also see a good amount of flows coming into the equity and hybrid funds, which has got large exposure to the equity, but maybe even a balanced fund kind of things. We see actually money coming in. And second is there is a high level of appreciation and high level of understanding that yes, there is a need for being invested in equity. So therefore, don't look at the timing of the market and still come into the equities as long as you have a 3 to 5 years kind of view. I think that confidence is coming back. So one of the view which we have internally is probably we'll see one of the best time for the Indian mutual funds and other the money risers in the capital market would probably be the best period they will see in the next few years, which have not been seen actually for many number of years. Having said that, 2014, if you look back, the mutual fund had received one of the highest inflow of 1,20,000 crores of gross inflow. True. The net inflow is about 58,000 crores, which are never seen in the last almost a decade or so, except in the year 2007.
So let me ask you this: over the last 15-20 minutes that we've been talking out here, there have been absolutely no red flags whatsoever. We've been only talking about the way the market, the kind of the optimism environment that's been around this market. But tell me this, we've got a good run in this market. The last couple of days we had a fantastic run.
True.
Around 8,900 on the Nifty and you're hovering around 30,000 mark on the Sensex. How much more upside are we talking about for this year?
I think one of the things which of course we always keep discussing is none of them actually in the last few years when the index was at say 18,000, I don't think many would have thumbed the table and then saying the time to invest.
True.
And we have now seen that same thing even post the outcome of election.
Sure.
And then the subsequent budget. There were a lot of question marks around whether it is 28 and 30, etc. The way we look at actually the next few years, even if we are assuming an average rate of growth of about 16% in terms of earnings growth, and the current P multiple is an average about say 15.5 times, and adjusted for growth, and even if assume that even going forward your P multiple will be about 15.5 times, a simple math suggests that a Sensex should be somewhere around 48,000. The next 3 years. It's a simple math.
Right.
So you can always argue that simple math is right or wrong, but the fact of the matter is just the simple earnings of the companies will take the market to the higher level.
True.
This was a very encouraging chat this morning. All systems go. Bala, thanks so much for coming in and joining us
Thank
today.
you.
Always a pleasure. Let's take a very quick break. That's all we have time for Market Guru. Lots more coming up. Do stay tuned.